What's the opportunity cost of investing in the wrong area? Hi, I'm Jaryd Krause.
And I'm Sam Powell, and we're the hosts of Property Pals Australia podcast. And in this episode, it's part 2, talking with Matt from Analytics. He's the co-founder and director there. So if you haven't listened to part 1, jump on that first, because it's going to make this one make a lot more sense, because we get really heavy into the data in this episode. And also we're talking about the changing landscapes for buyers agents and investors with the enhancement of location research data that obviously Analytics are renowned for in the Australian property industry. There's a lot in this episode, isn't there, Jaryd?
There's so much. I mean, talking about what's going to happen with the landscape of like buyers agents. Is there going to be a need for buyers agents in the future or not? What does it look like the demand of property investors and then the demand of buyers agents look like in the future, and also the demand of data. We also talk about comparing 2 different hotspots. We talk about target range, like briefs, target ranges. There's so much in it. So this obviously isn't the only way we can help you free. If you haven't, go away and get our mini course on how to maximize your borrowing capacity on our website, propertypals.au. And for now, enjoy the pod. Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jaryd, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. There's another question here. I think Sam brought this one up. Is like buyers agents and investors can both use hashtag, right? Hashtag data.
Yeah.
And if so, is it possible that can create like a self-fulfilling prophecy of like those future growth locations where you've got, we become, as the demand, and this is only happening because of supply and demand, like property and every business and everything, right? You've got more people trading or buying in and out of properties and investing in property now. It's more accessible. It's easy to do because you can use the buyer's agent. So more people becoming buyer's agents, a lot more people becoming investors using hashtag. Does this mean that, at a certain time, there's reasons where low growth locations can just, because everybody's getting in.
They become, I know. I've been asked that question recently more than before, and it's funny. Every time I'm asked that question, I go into defense mode in explaining. I'm just thinking why. I was reflecting on that, and in honesty, like, so for example, first, there's an issue with briefs in a sense that they're mainly, within that 550K range. Now, I always say, every brief is different, which means that every location should be different for that brief, but there are definitely crossovers because currently, let's say 16,000 suburbs in Australia, or 15. Out of those 15, there are, 5,000 suburbs with significant data volumes. And out of those 5,000, let's say there are, 200 that are, blue chip. When I say blue chip, I don't mean price point. I mean great investment location. So obviously there's going to be some crossovers. And then I thought about that question and how to, because I've been asked recently about it. What we usually do, let's say when we identify a warm spot, I don't drive the supply. I don't drive the supply side of the equation. I have nothing to do with the supply side. So, for example, a year ago, I had a buyer's agent come to me and ask me, okay, Matt, can you tell me where the next berth is going to be? And essentially it was more of a distress call in the sense that, Matt, should I go into Perth? Everyone's talking about it. I don't know whether I missed the wave and all of that. Can you find me the next location? And I remember I did a report for him. Mount Sheridan was first. Mount Louisa was second. And Bowl Plains, how do you pronounce that? It's also in Bohl.
Yeah.
One Cairns, two towns. Well, it was in November the 6th, 2023 when I sent a report to him. And I remember he entered those markets and there wasn't as much competition there. I think he acquired 20 properties in total. And how I got to that was simply looking at the trends that we're talking about now. The supply trend was reducing, demand trend was flat, or the recent trend was also reducing. So I interpolated, it's gonna, have soon it will become a hotspot, and I promoted those areas. I just actually looked at the trends, and I always start with what happened with Sam.
No, it's all good. Keep going. You always start with what?
Yeah, I always start with the supply side. So I always start with the reducing supply trends, because demand to me doesn't really matter, especially if it's a warm spot. Again, coming back to how we construct the algorithm, we first eliminate the risk with data confidence and industry centralization. Then we consider the affordability, and affordability has an aspect of demand in it as well. And once the market is affordable, I know that even small increases in owner-occupied demand will cause a positive feedback loop, which is why I'm not too concerned about demand to begin with. I then restrict the supply. Now, and this is how we delineate warm spots, and we know that warm spots will turn into hotspots because you have a restricted supply, demand is flat, vacancy rate is dropping. When vacancy rates are dropping, rents are increasing, going to come soon at a point where ownership becomes more sensible with renting, and then that switches to dom. That's the essential process. Now, because I don't control the supply side, I essentially have nothing to do with that, and I just look at the trend. Now, what happens down the track is that when this warm spot turns into a hotspot, and when hashtag members start migrating to that area, then it does increase competition. But I didn't onset it. I did not onset that area, or turn it into a hotspot myself. I just made it, or let's say if all of the members, let's say we have 1,000 members and all of those members flock to Mount Louisa, it's going to create enormous competition, But there are other warm spots that they can invest into. The issue that usually it's the shiny coin issue. So, for example, the warm spot methodology works because it just works. So now Cairns, let's say, is turning into a hotspot. It's in the transition phase between a warm spot and a hotspot. And how do we know that? We see 30 people competing for the same asset in Mount Sheridan, for example,
Yeah.
And I promoted Mount Sheridan to that buyer's agency, as I said, 6th of November, 2023. I know the date because I was looking through the emails. I was really interested. Now, there are other warm spots that exist in Victoria, but people just want the Cairns because they know they're going to make money. They're sort of still afraid, knowing even that the methodology works, they're afraid to shift on a market that doesn't have such a fancy dom, trend. So to answer your question, it does intensify competition when it becomes a hotspot, but it was already trending that way. I just delineated the area.
Yeah, it's kind of like explaining it like investing in equities, whether it's crypto or anything else, that people are looking at charts. It's like they see that an equity or whatever it is, a company going up, and they're like, oh, I need to get in this, fear of missing out.
That's reflexivity. That's reflexivity, yeah.
Versus, oh, hang on a second, this is already super hot, might be too cooked. Let's go and find something else that is kind of like in that warm bit and ready to get really hot and get the bigger gains, right? It just takes a strong, unemotional investment mindset to get there.
No, exactly. It's counter-cyclical investing, but it's not even counter in a sense. Well, it is. I'll give you an example. So Alex and I are coaches in the BAI Institute, and I think maybe it was this year, the beginning of this year, we did a presentation on counter-cyclical investing, and we did a full-blown analysis, man. Like we went like deep. Like we even created metrics that are not even present on hashtag. We did different kinds of charts, etc. And we did really deep analysis, and we said that Greater Melbourne will become a hotspot in the next 2 years. And I think at the time, there was so much negativity online regarding Melbourne. Like it was really bad. People posting CoreLogic charts and saying that supply is increasing. And that's one other thing, supply is increasing. Go, where? Where in Melbourne is supply increasing? Entire Melbourne? Every single suburb? Like where? And now you see, people trickling into Melbourne, the discourse is changing, et cetera, et cetera. So, essentially, it all comes down to, as I said, interpretation of a trend. The trend is already there. It's established. I have nothing to do with it. I just read it. Then when it comes to becoming a hotspot, yes, it becomes a problem. Obviously, people are competing for assets. But why are you in a hotspot? I mean, why are you in a hotspot? Why don't you move one section or one step before and actually invest elsewhere? And by the way, the issue another issue, hotspot issue. I mean, hotspots are great in a sense that, you'll make a lot of money in the first couple of years. Fantastic. But you also make money from discounting. You don't need to make money from market momentum. You can make money. You can enter a market and negotiate. I'll give you an example. And I don't want to, again, start a witch hunt, but, Milton West, like I had a customer call me who we've done the swarm spot methodology, reducing supply, very affordable. Demand was flat. Recent DOM was reducing. I think it was sitting at 30 days, which is a 34, which is favorable. It was green, essentially, And he wasn't sure. Anyway, he went in there. It was 550, negotiated it down. I'm not sure about how much. And pardon the chronology. Maybe I mixed it up. Then we done a pest and building inspection. There was some minor issues, negotiated it further down. Anyway, the negotiation went down by 80 grand. 80 grand. In percentage terms to a 550K asset, how much is that? That's your equity.
Yeah.
That is your equity. So you can sit on the sidelines for 2 years, surfing in Bali beaches, waiting for the market to actually kickstart and turn into a hotspot. You know what I mean? Like, why are you competing with 50 buyers agents for the same asset in Cairns or Townsville? Why are you doing that?
Right. You know why, mate? Come on, it's all the bloody everyone's just a sheep. They're following each other.
Out, right? You've got all these buyers agents like, oh, everybody's getting in this area. We've got to get in this area. Let's go. Or you hear people listening about a hotspot that's coming up in a podcast or something like that. Like even the people that are like the places that you've mentioned, the locations in this area, people I can know that are listening to this podcast already have FOMO around those areas.
No, I said Milton West for a reason. And usual FOMO is this. And this is a FOMO. And I had debates our Facebook group recently. Matt, there's huge supply coming to Milton. Okay, where? To Milton. I'm talking about Milton West. But yeah, and then I say, explain to me a methodology and a process where oversupply in one area corrodes price growth in another. Explain to me how that works. So let's bring it down to everyday behavior. Okay, so I see I live in Denham Court. Camden is the next area. I see in Camden a lot of property being developed, and I'm in my house and I go, you know what? I don't want to live in Denham Court anymore. I'm going to go to Camden because there's newer property there. So let's say, which means that demand is going to be sucked out from all of the surrounding suburbs into the one that's developed, which is counterintuitive because aren't we supposed to be afraid of oversupply and new development in a new area? How's that area going to get additional demand? Like, it just doesn't make sense to me. It does not make sense to me, and it doesn't happen. Also, the release schedules for new land. Let's say you got vacant land, and a lot of people assume vacant land equals oversupply. That's incorrect because you've got at least 4 degrees of separation before you got a turnkey kind of asset that you're walking into. You need to register the land, develop it, build, etc., etc. And there are bottlenecks in councils and in developers, both cash flow and workforce. They can't permit to allow a complete release of everything at once.
Right. So you're saying like supply, like just because there's a lot of land doesn't mean there's a lot of supply because it takes so long to get to that.
So first, vacant land does not equal oversupply because for oversupply to occur, you have to have too many assets and not enough demand. So what people imply is that by having vacant land, there's not going to be demand there. So that's the first mistake they make. The second mistake they make is that they assume that if something is vacant, everything will come to market at once. And I used to work for developers. Developers are very conscious about cash flow. They release everything in stages, which is why you see even in Zetland, everywhere, every development that comes online, you've got stage 1, stage 2, stage 3, cash flow. Now, let's talk about council. Do you think the council has enough workforce to release 100 developments at once? They're slow as it is. Let alone, you know what I mean? Like, it just can't happen. People assume that something will happen without sitting down and going, okay, let's think it through. And finally, if there's an oversupply in one area, and yet I look at another area, it has reducing building approval ratio. So building approvals are going down. Supply is tight. Demand is increasing. Explain to me how the corrosion will happen. I just can't see it. And I know I bought, let's say, I bought in Gregory Hills 15 years ago, and I said that at the beginning. It was pasture land here. Like there was nothing here. And it was the Southwest Growth Corridor. They started releasing as the migration was happening. I bought for 200. Now it's worth 800, that piece of land, 640 square meters. That's a 400% return in 15 years. Tell me where have you seen that kind of a return? Now, it could be a fluke, fine, but I've seen it happen. Yeah. Oh, that's right. That's right. We can talk about that, by the way. I tried Bitcoin as well. But yeah, it's just all I'm saying when I talk about these things, and let's say Melton, west of the world, and these warm spots, all of that, just sit down and think it through. Try to superimpose and triangulate as many data points as you can to make a decision, and don't place too much significance on one item and ignore everything else.
Right. Yeah. Love it.
Yeah,
I love
that's some sound advice. I'd go back to one more little. I mean, I'd sit here and suck your brain. That sounds really bad. Pick your brain. That's what the right word. Suck all the knowledge out of your brain was where my head was at. Anyway.
Yeah, no, I got it.
Right. But this is my mentality, right? Like, obviously, data's being more accessible to everybody. You know, buyers agents are rising. There's great education out there, especially through your platform, to help people understand the fundamentals of it all. And then put all the pieces together, which is, you know, not many people are doing that. Over time, obviously, your brand will obviously increase, and then there'll be more of a following. It just leads to me thinking, well, you know, hotspot markets from my perspective at the moment, I don't want to buy into them anyway. And I was definitely on that train, like buying into markets that increased 10% plus. And what led me to Hashtag, in all honesty, I started your platform years ago and it's too intelligent for me and I couldn't figure it out. And over the years, you've done such great work in... Yeah, well, the education you've done, mate, and the mentoring and everything, that's allowed simpletons like me to actually get in and understand it. But my issue, going back to the hotspot stuff, is you're going to be buying properties and then you're going to have issues with valuations coming through anyway. So you don't want to do all that work to then get knocked back at the last minute and then have to start again. And then the volatility in some of those hot markets as well is quite severe. So I'm just saying that, like, if people do want to become good investors and do it, like, you have to take the time and do it properly. And those warm spots, I've dealt with it for years too, where, you know, you look at it and you're like, that makes complete sense. You tell people about it. But I mean, before Townsville became a hotspot, everyone was telling me, oh, no, I wouldn't buy up there because there's too much, you know, there's cyclones and all that. And then before that, Perth, right? Like, I was just going, well, you know, Perth's a great market, but you don't invest in the West Coast. And it's interesting to see, and you've seen it 10 times, probably 100 times more than me, but there is this confirmation bias that people go through looking at short-term information and they're not doing the work. And I think that's with any kind of investing, like, you do the work, you know, and especially when you spend, as you said, like $500,000, it's like, it blows your mind.
It's difficult for you, absolutely. It's difficult for you as a buyer's agent, for example, because you're going to get clients that hear, you know, chatter online about something, and I guess the way to deal with that is and this is what I would speak to with some of the customers when they have an idea about something and about a particular area. You print out a report and you say, this is where you want to invest. This is it. This is where I think you should invest, and then you explain it. You show them, you superimpose it. That's the only way for the penny to drop, because otherwise what you're gonna find yourself in this loop of explaining yourself and trying to defend your stance. You're gonna look even more inferior. You know, you're trying to make them believe in something. They need to reach the conclusion themselves. But in order for them to reach conclusions themselves, they need to have two different examples or contrasting examples that show this is what you want, this is what I think, and then explain to them what they're looking at. That's the only way. But you're right. Yeah. I mean, there is a huge issue of, great, Townsville, Cairns. I remember people investing in Townsville. Cairns was whatever, you know, cyclones, flooding, all of that, which is an element that you should consider. But then the question is, how much significance am I placing on it? And then the next question is, what are the alternative options? See, one area, whether it's a good investment location, matters not. It only matters in the context of comparison to others. So when people say, I don't want to invest in whatever, Mount Louisa or that train is, left the station. Let's say, Mount Sheridan. I go, okay, what are the other options? Tell me what the other options are, and then let's reach a conclusion. But people have the tendency to isolate a problem and then beat it to death. I don't want because flooding. I recently had a session with one of our customers, and the lady was concerned about flooding. I go, okay, I understand that there's potential. And by the way, the area that she wanted to buy in had, some sort of exposure to potential flooding, but it was minor. I mean, the insurance premiums were extremely low there. Essentially, the insurance didn't even care, But I go to her, yeah, there is a potential there. It could be a small risk, but don't just overshadow everything else and just focus on that. And then let's say the next thing is, what are the other options? I don't have them. Or I don't want to go to Melbourne. I don't want to do this. I don't want to do that. Well,
what do we want? Yeah.
I think we'd have to do a bit of introspection, before we actually, make a decision.
Also, I'd like to add to that as well is that, like, if insurance premiums are going to cost you an extra $1,000 a year, but your growth rate's going to be crazy
Cost
in
of
that
business.
area, yeah, it's a part of doing business, and you're still going to get a far better ROI by just having an extra $1,000. That extra $1,000 could make you an extra $40,000 a year, $30,000 a year, 20. Who knows?
And what you've just done there is exactly. I completely agree. But you have fundamental knowledge about what investment is and how to run a business. There's no perfection out there. And I always say this, you can't have a perfect scenario. So you have to understand what you're gaining and what you're losing. And I guess that has to be some kind of fundamental knowledge about investing in business for you to be able to make a decision. And it is a learning curve. I mean, I do understand those people, understand their concerns, and I feel for them. I mean, the reason why I want to look at every metric under the sun is because when I go to bed, I want to sleep at night. You know what I mean? I don't want to come think, oh, what did I say? Why did I do it? So I do understand them, but, you need to make a leap. You need to make a decision, and you need to put in the effort, as Emma said,
Absolutely. Absolutely.
That's a good point. I mean, I'm mindful of time too.
No, good boys. I'm not.
Like, there was one thing in my mind where it's like, understand the people behind the business to understand, I guess, whether you have that confidence in the business to follow and to trust. And like, I'd tracked to sort of a little bit of your journey, and it's pretty clear that you've got that moral and ethical boundary, like really, really strong. And that's what's given, me the confidence to, just really soak up as much information as I can from you guys, because you've done it. Like, we're also time poor, because I think what people are lacking, and Jaryd taught me this too, is, focus on the one thing, and you'll be able to amplify, I guess, your investing returns. And location research is and it's strategy too. We talk about that coming first. So that's the most important part, because location, it does that. I say it does 80% of the heavy lifting. People still get caught up in, I want a 4-bedroom. That's always a good conversation, but there's definitely more to become. I think it's just starting what you're building. My thought also goes to, I think you kind of answered the question here, but people, I guess the retail client, they always push the business ideas. Inevitably, there's going to come a platform where the people will ask, where is the next growth location, whether it's through a GPT or whatnot. I was thinking, is HTAG going down that path where we're really simplifying it? But I think even as an investor, it doesn't discount the fact that, you could outperform the Australian average by keeping it simple. But if you want to, make a really good return on your investment, you got to do the hard work. Is that a fair assumption, or where's your big brain at with that?
So I don't, and this is, I guess this is a side point to your question. I mean, will buyers agents be phased out? Essentially, and we have to understand. So we just spoke about timing initially, and we spoke about timing in the context of a brief, which is in the context of serviceability. Yeah. That's the link. So you have to have a brief which is related to the strategy, upon which you filter and you find the right location. And every individual is different. It is very hard to account for every single nuance and just by the click of the button say, yes, this is it. You know what I mean? It's not, some clients need to extract equity in 12 months. Some clients need to, and which sort of reshapes which metric is more significant and why. Some clients need to extract equity in 4 years. Some clients are set and forget. So there's so many permutations there, especially with the overarching strategy. You know what I mean? There's so many permutations there that I think the buyer's agents or professionals or the hard work, as I said, is going to be even more required into the future. And this is how people are going to separate themselves from others. You know, you need to, and it comes to aggregation. Aggregating data at a suburb level, you can discern pattern and make a decision. But you can't do that at a property level. You can't have such a volume of data aggregated to create a pattern and to tell you, number 19 is better than number 18. You know, you just can't do that. There's this intuitive understanding about what is better that a buyer's agent has, and the feel of the street and the location and the facing and all of these other things that I have no idea about, that will always require that professional to connect the front end strategy, then the research, and then the asset selection. Now, I'm not sure whether I've answered your question. I think I digressed a little, but essentially, I think the need for professionalism and for understanding is going to increase and multiply. I think people who just want to sail through, follow, will lose. I mean, a lot of people think that the number of buyer's agents that are coming to the market is a problem. I think that's actually an opportunity, because it becomes much easier for professionals to differentiate themselves from others by competence. Those who actually invest the time and can actually connect A, B, C into a coherent story, can understand, can create connections with sales agents. I mean, connections with sales agents, with everyone else, becomes very paramount when you're entering a hotspot. You know what I mean? You know, you're going to find an asset and I won't. I said to the same lady that I was speaking to, I said, listen, you can delineate an area, but if you're struggling to find an asset, you need a buyer's agent, because they buy higher volumes, they have connections, they have this, they have that. So, in a roundabout way to answer your question, I think the need for competence and understanding is going to increase dramatically, and which is going to allow certain buyer's agents or professionals to separate themselves in comparison to others, which is a good thing. The more you can,
yeah, like for an investor, you know, it's one thing for a buyer's agent to say, just buy this property. It's another one to say, here's this property and here's why I should buy it. And it gives that here's why you should buy it, and how that's delivered by a good buyer's agent is going to help people get across the line with their emotional stuff if it's their first or second or third investment, right? Even like a sophisticated investment, they want to know why. So you can see, like, the more that come in, it's going to sort out the rest of the pack, and the better ones are going to just advance.
Absolutely. The investors don't have time, man. They have regular jobs. I mean, I gave you the example about Milton West. So the buyer's agent was astute enough to be able to negotiate further after the pest and building inspection, ask the right questions, position at the right time. All of these other things that how's an everyday person going to do that? Like, that's just a very simple example. I'm not trying to simplify what it means to be a buyer's agent, because I don't know what it means to be a buyer's agent. But I can tell first there's a time gap and time friction that people don't have to actually do all of the legwork. Then there's connections, relationships, knowing how to ask questions, when to ask questions, how to negotiate, how to know how to connect this asset and particular location to their strategy and what they want to do. So it's getting actually too complex and sophisticated for an investor to any service provider, and this is what Alex and I keep on talking about. Any service provider that will allow you to find an asset and a location by click of the button is glossing over too much.
Yeah, exactly. And they're not doing their client any justification, really.
It just doesn't work that way. Yeah.
Look, Matt, you have done so well in terms of, like, just providing education for people in the property space, and with what you've done with HTAG. You've also given us I think it's a discount code actually for people to go away and check out HTAG, right? So we'll put that to property _Powell _10. We'll put a link to that, guys, in the show notes as well. That's at htag.com.au. There's a link there.
Sure.
Now, where else can people go away to contact you, or just go straight to the site and get in contact with you there, Matt?
Yeah, they can go straight to site. I think there's a contact email there, and I look at the contact emails. They can contact me on Facebook through, either directly or through our Data Driven Property Investment Facebook group. Either site or Facebook. I'm nearly always there. Sam knows. I'm just pumping things out.
I didn't know that they. Did you get Wi-Fi? Were you on Telegram on the plane or something? What's going on?
Maybe when I was stopover.
There we go.
Yeah,
anyway,
in Qatar. Who knows? I'm always on the phone, man.
This space is, I think it's really only just evolving. And I mean, even with your version updates and everything like that, you're just adding so much more value each and every time. And it's forever going to be changing, because that's the only constant in this world is change, right? So I think
absolutely, yeah.
I'd love to get you back on and pick your brain. If you allow us, you don't become too much of these property influencers, but at least you got the you've got the right ethical and moral compass. I think that you're going to do really well and help a lot of people. And what a great thing to give back to the world, right? Because so many people. This is why I got into this game, is because as a valuer, I was seeing people making just simple, like errors in their investing, and it would actually send them back 10, 20 years from that retirement goal, because they don't teach this stuff in school, right?
No, absolutely. I mean, it's hard to be my friend. Let me tell you that, because I'm very careful about what I say to people and how I say it, because it's not an ego thing. But imagine, as you said, you do something and you completely ruin someone's future. Like, I wouldn't be able to live with myself. And now, the thing is, though, I'm not an advisor, so I don't advise people where they could buy, but I teach them how to look at data to make a decision. But even in doing that, you need to stand behind what you say. And you see it regularly, people just pumping and dumping areas. I mean, that's like, they pump areas just because they're buying there. You see that all the time. Yeah. It's just ridiculous. And I think the change is necessary. And I do think that the guys and people who have that ethical mindset, and I think the one man, like the boutique buyers agencies, for example, I got asked this question, what are the buyers agencies of the future? I think those boutique buyers agencies that have one or two employees or by themselves, who want to do the right thing, we're not, doing the right thing is a long-term game. Do you know how many offers I had, to promote a developer, to get a 40K kickback from every sale, to do this, to do that? I was leaving $500,000 off the table a year from purely that. But and starting as a business that's bootstrapped, in a sense that it was financed mainly by Alex and me, it is hard. You get these, shiny coins, but doing the right thing is a long-term game. But at the end of the day, I think it essentially pays off. And as I said, you can sleep at night, and that's the most important
Absolutely, thing. I'm with you. It's like it's hard to build a reputation, because that's built over time. It only takes you one little thing to wreck it. So
exactly, yeah.
Thanks so much for coming on, Matt. Really appreciate you, and hopefully we can get you on again.
No, absolutely, anytime, gents. Thanks you for inviting me. And again, apologies for last time. And whenever you're available, I'm keen to chat.
Awesome.
Sounds good, mate. Looking forward to it.
Take care. I appreciate it.